You start.
Good evening, everyone, and welcome back to Real Talk Weekly. I'm joined here with my colleague Harry, and tonight we are going to uncover the age-old question of investing on the Northern Beaches, whether to go with houses or units. Stay tuned. Good evening, Harry.
Oi.
Good, mate. How are you?
Great. It's been a cracking day.
It has. It was a good morning. A little bit of rain this afternoon, but
yeah,
never let the rain bring a bad mood, do we?
That's it.
So
cracking question we got, by the way. I think a lot of people want to know about this one.
It is. And I feel like it's one of those questions where, depending on how you look at it, there's no right answer.
Yeah.
There's only advice, statistics,
Yeah.
and your own personal preference that can really answer
and your situation, really, depending on how flexible you are, what your situation, what your circumstance is. Because to some people, it may be in favor to buy a house as an investment, or if you're a first home buyer, probably going to buy a unit.
Exactly. So we'll just touch base on that. You kind of kicked it off with the first home buyer. So
yeah,
in terms of investment, there are bits of ways. The government don't really like you doing investments as a first home, but there are ways around it. I believe it's if you rent it out within the first 12 months, 6 months out of that 12 months, you can kind of get around that.
Yeah.
But it's really important and crucial that people are purchasing based off their own personal capabilities and the market around them. So I think for first-time investors, we'll word it, not first-home buyers, first-time investors, I think the unit market's definitely something a little bit 100%. More secure for them. Because you get better yields. So the Northern Beaches yields, you're kind of averaging around that
4.5 to 5 net. It's probably the average. Yeah. And I think being a first-home buyer or first-home investor, I should say, buying a unit, it's significantly more easier for obvious reasons. Number one, it's price. An entry-level 1 or 2 bedroom apartment on the Northern Beaches right now, entry levels are starting at that. For a one, it'd probably be around that $750,000 to $800,000 mark, just to get your foot in the doorstep. For a 2 bedroom, probably pushing towards just under $1 million. But it's a really, really good price point if you're a first home investor to sort of get your foot in the door. So price would probably be the first thing. And from an investor's excuse me, from an investor's perspective, having the maintenance. So buying a unit, you're going to have significantly less maintenance as opposed to buying a house, which is good. So it's going to cost you less outgoings, throughout the duration of your ownership when you actually, own that investment. And I think it's also really important, Alex, that we also talk about the downsides for each point, because, buying an investment, although it may seem really, fun and, you've reached a milestone, but sometimes it's not always sunshine and rainbows. You do get hit with, you do have strata to deal with. Strata is probably one of your biggest expenses when owning while owning, I should say, an investment property.
Yeah, I guess, as you said, you kind of have to weigh out the pros and cons with buying an investment. And with unit, you are correct. It is cheaper, so you'll be able to get in as a first-time investor kind of around that, say, $1 million mark. You're getting a little bit better value for money. You're getting a better yield. Yep. Your demand is there as well. I mean, DY in the Northern Beaches has a vacancy rate of about 3%, which is historically low. And the density around DY in the Northern Beaches, your demand's there. So
and the scarcity is always going to be there. You always have options majority of the time of the year. You'll always have lots of options to actually consider on the market when you're actually making the decision to get your investment, which is always a really good thing to have, really reassuring feeling to have, that you've actually got the options to choose for.
Exactly.
When buying your first investment.
Yeah. So from an investor's point of view, you're looking at, obviously you'll have the demand there, your yields there. But in terms of the negatives, you touched on it a bit there, strata. So when purchasing, some of the due diligence you have to do is within the blocks you're purchasing in. So it's like a 70s block or an 80s block or even older, you're going to have to start look at the condition of the building. So if you get into a building where there's concrete cancer, or you get into somewhere without paying for or doing your due diligence of getting a strata report, and you miss that, you could be hit with a
massive
30, 50, $100,000 levy.
$100,000
And it really kicks you in the gut as an investor, because it just puts you that one step back.
Yeah.
Now, that's probably your worst case scenario. Strata is great in terms of taking care of the common areas, making sure the apartment block's up to date, and just kind of running your property for you.
And another thing, just to touch base with the strata, is that when you've got a strata looking after the building, another unreassuring feeling that you'd have as an investor is that sometimes, most of the time, you don't actually have control as to, unless you're on the committee and you actually have a say over, what gets done, or, what gets implemented on the building. You don't actually have a say in, in the strata itself. Although they do conduct, an annual general meeting once a year, the strata committee. You're paying, $1,000 per quarter, something along those lines. That's $4,000 a year, and a lot of the times, you don't actually have general control over, where that money's being contributed towards. So, again, just something else to consider. But those are the pros and cons, guys. For units, houses completely different, good and bad for a number of reasons. I think the biggest one, just addressing the elephant in the room, is capital growth over time. And I think this is the biggest one. If you've got the money behind you, if you've got a little bit more cash to play around with, the capital growth, guys, in particular on the Northern Beaches, is incredible. In the last 10 years, DY has done 115% capital growth since 2016, which is really, really big numbers, because when you're taking into consideration, let's say, a $2 million property, 115% on a $2 million property over 10 years is, over $4 million. It's ridiculous.
It's massive money, and I think that's where you kind of find the split in investors, and you kind of see the change. Whereas units, you're kind of hanging on that yield, you're hanging on that cash flow, or not the cash flow. Whereas houses, you're not really too worried about that. You're a seasoned investor. You've just purchased, and you're happy to kind of service that mortgage for the capital growth in the future. And I think that's the main point of difference that you'll see, where most kind of first home investors and first timers and just getting into it will kind of stick around those units. But if you've got a little bit more cash flow coming in, you're happy to service the loan, that the debt doesn't really be too detrimental to your way of life, you're going to go for those bigger investments in terms of a house. So that's kind of where you see the differentiation between houses and units is those two key points, which is really good. But as you said, houses have performed outstanding over the past 10 years, and we're kind of predicting it to continue to do that. I mean, the Northern Beaches hasn't really slowed down much at all, and we can't predict it. I mean, we're in and out of the property market every day, every hour of the week. It's quite a fascinating thing. Everyone, I think we've touched on it before in previous podcasts, everyone kind of says that the Northern Beaches functions on its own little wheel, and it's really the case. So it should be interesting to see. But if you are an investor, or if you are someone who's looking to purchase on the Northern Beaches, our office store is always open. Harry can make a decent coffee. It's free, so that makes it a little bit better.
We've got to do it manually now. Our frothing machine's broken.
Yeah,
so there you go.
Yeah, so if anyone's interested in buying an investment or just a property in general, our office door's always open. Our office line's always on. Our motto is we never sleep. So
quite literally,
don't hesitate to get in contact.
I think we've got to touch base on the negatives of investing in a house, like we did with the units. I think just inverting that, the topics we discussed with units, maintenance wise, is going to cost you a fair bit. You think of the average size of a unit and the average size of a house. Obviously, a house is going to be bigger, which means your outgoings are going to be significantly more. Your water rates, your council rates, your strata, or your outgoings are going to be. Sorry, not strata. Correct me. Not strata. Just your general outgoings for a house will be a lot more, which will probably be the downside. So I guess that's the trade-off with, you know, owning a smaller property like a unit. You know, your outgoings are minimized, and then when you make the decision to, you know, buy something bigger, better, more expensive, as you'd expect, your outgoings would be a lot more.
Exactly, and the outlay of cash. Like generally, when you can get into units, sometimes you can negotiate a 5-10% deposit.
Yeah.
5-10% on $1 million versus $3 or $4 million is a big difference. So that's kind of going back to like the veteran investor. That's when you kind of see those people with the cash behind them, with the ability to kind of outlay that cash and service it once it's in there. Those are kind of the things you have to weigh up. So that's where I think it's the most important to see the differentiations between the two.
Yeah, 100%.
Perfect. I think we touched base on.
I think we've summarized just about all the points there.
We could talk for
We could talk a lot more, but we'll keep it short and sweet
tonight. Short and sweet. Perfect.
Just the main points.
That's it. Thanks for tuning in, guys.
Thanks,
Appreciate
guys.
it.
Enjoy the rest of your day.
Yes.
Enjoy the rest of your week. And love ya. See ya.